wealth in any market condition. Look, maybe you know nothing about investing in the stock market. Maybe you do know a little something about it. But whether you're doing this as a primary gig or a secondary gig, there's a lot of money, a lot of opportunity to be able to dive in and be able to make money in the market. But how do you do it? Well, we're going to decode that today. And with us today is Simon Rhee. Now, Simon is the actual author of the #1 best-selling book, The Tale of Trading, and the founder of tailtrading.com. I need to make sure I did that correctly. I'm going to ask him that if I pronounce that correctly. He has 3 decades of experience in the financial markets, having previously held senior positions at Goldman Sachs and Citi as well. His vision is to help people live more creative, joyful, and inspired lives by alleviating the burden of financial stress that weighs so many people down. Now, his mission is to revolutionize the way finance is taught by shattering long-held myths that have been perpetuated by Wall Street. Simon, thanks for joining us today.
My pleasure, Si. Great to be here. Thanks for having me.
Yeah, for my first questions, and I usually ask this before we even go live, so my bad for not doing that. Did I pronounce the website correctly?
Close enough. I mean, Tower of Trading would be I mean, if you want to be really picky, I mean, the correct Chinese pronunciation would be Dao, but that just gets confusing for most people.
Yeah, it's like if you get me to try to do that, it's like rolling R's in Spanish. It will not be pleasant for the ears.
Yeah.
So listen, this is interesting. I love what you do, and let's start with one of the things we talked about in the bio. What are some of these big myths of Wall Street that you're kind of looking to get past and help people recognize that they actually can make money in the markets?
Yeah, look, I mean, there are several. There are the 5 that I go through in my book. Probably the headline one is this idea that a 10% per annum return is a great return, and people have they've heard this their whole lives, and they think that how could they possibly hope or expect to earn anything better than that, right? And if you look at what the S&P 500 has done historically, its average annual return is about 10% per annum over a market cycle. Okay, so if Wall Street can generate you 10% per annum over the long run, they can probably do that without breaking a sweat, but they get to charge you a heap of fees for doing that. And if you believe that that's the best you can ever hope for, you're reasonably okay about paying those fees. But the fact is 10% per annum, it's better than nothing, right? But it's not a great return. And more importantly, it's not a return that is going to move the needle in the lives of people who aren't already very wealthy. Now, if you've already got $1 million saved up in cash, yeah, for sure. 10% per annum, it can earn you $100,000 a year. That's a nice income. But what if you've only got $5,000 or $10,000 saved up? If you got $10,000, 10% per annum, that's $1,000. Again, it's not bad. There's nothing wrong with that, but it's probably not going to move the needle in your life. So people talk about compounding returns, and Albert Einstein was the guy to say compound interest is the 8th wonder of the world. But if you're very young and you've got 30, 35, 40 years ahead of you, compounding at 10% per annum can work. But if you don't have that much money or you don't have that much runway, you need to find an alternative. And what I teach people is that through trading, you can compound your gains a lot more regularly rather than sticking it in a portfolio of ETFs and sitting on it very passively and basically just crossing your fingers and hoping for the best, hoping markets go up and up and up. You can take a far more proactive approach and compound your gains regularly. And I talk about a return of 5% per month as opposed to 10% per annum. And after three to 5 years, returns can start to become life-changing sums of money.
How do you do this? Like, I don't know anything about trading at all, right?
Yeah.
I'm a novice. I'm more financial savvy than the average person, obviously, because I'm in financial services for 20 years. But how does an average person get in the market and even begin to learn how to trade without not losing their, behind trying to figure the thing out?
Really important and great question. So I wrote this book, The Tao of Trading, which is, I mean, you wouldn't know it from the title, but it's a book on options trading. Now, you might think, well, why does the world need yet another book on options trading? There have already been hundreds of them written, and I've read quite a few of them. And I can tell you that for the most part, they are difficult and boring. So my mission with this book was to write a book on options trading that is both simple and engaging. And based on the reviews and the feedback I've received, I feel like I've ticked those two boxes. Many people have told me that they've read the book in a weekend, or in just one or two sittings. And it's a 342-page book. It's not a booklet. So people are obviously getting through it quite easily. And why I think options are your best friend if you're looking to grow your wealth or generate a second income stream is because they've got a feature that no other financial instrument has, and that is this asymmetry of payoff. All right. Now, you might hear the word asymmetric, and it might remind you of high school maths and something to do with triangles. I don't know. But asymmetric just means not equal. All right. It just means one side is different from the other. And when it comes to options, it's talking about the risk profile. You see, options give you limited downside with uncapped upside. So they are the world's greatest risk management tool, the financial world's greatest risk management tool. You can monitor and limit your risks very deliberately by trading options, and yet leave the upside uncapped. So it's a very powerful way of both managing risk and growing a small account quickly, or generating a meaningful income stream off a larger account.
I always like to simplify this for people that might not know certain things. What are options? How do options work?
So there are only two kinds of options. We've got call options and put options. So we buy call options when we think the price of the underlying stock is going to go up. So just think call up, as in call up a friend. And we buy put options when we think the price of the underlying stock is going to go down. You just remember put down, as in put down your luggage. Now, a call option, it's like I used to say that options are like the Airbnb of the finance industry, because when you buy a call option, it's kind of like renting a stock. Let's just say you want to rent a beach house in Malibu or a big chateau in France. I mean, you probably can't afford to buy the thing anyway, but you could probably afford to rent it for a short period of time. And the great thing about renting a property like that, particularly for a holiday, is you get most of the benefits of ownership without any of the downside, and it costs you just a fraction of what it would cost you to buy. Same thing is true with a call option. You can rent a stock like Google or Tesla for a month or two, and you get most of the benefits of ownership. You don't get dividends, but you get to participate in any share price appreciation, but you only pay a fraction of the cost. Put options, on the other hand, are very much like an insurance policy. So you might buy an insurance policy on your house, and that insurance policy will pay you out if something bad happens, right? So if your house catches fire, the insurance policy will pay you out. You can buy a put option on a stock, and it works like an insurance policy in that put option will pay you out or will gain in value if something bad happens to the stock. And in this case, that something bad happening is the price falling. So we can make money on call options when prices are going up. We can make money on put options when prices are falling.
So how can an average person figure this out? Because it seems really simple, right? But I can't tell you, I don't know. There's got to be a lot of people that try to get into this in the market in different ways. And I kind of think like real estate, like there's so many people that say apartments are the best to invest in, or so, storage units or land. Everybody's different there. And it seems like there's a lot of ways to invest in the stock market. So I guess let's start there. Can you go back a little and just touch about why options? Now, you mentioned really that it's really hard to lose, but give me some insight of why you think of all the ways you can trade in the market, why you really think that options are the best.
Let me just clarify that. You absolutely can lose with options. And let me talk about one of the big drawbacks of options up front. An option is a wasting asset, okay? It's got an expiration date, a date beyond which it literally ceases to exist. All right. So if you're buying a call option in a stock or a put option, you've got a limited amount of time for it to work. You can buy Google stock and hang on to it for the next 15 years. And Google will probably still be around then. We don't know what the price will do, but you can hang on to it. You buy a call option in Google that expires in 2 months. And in 60 days time, that option will disappear. It will cease to exist. So what that means is if you're trading options, you have to be able to identify high probability moments in time to put your money at risk. Now, this is really important because most of the time, stock prices are, they're kind of random. They're kind of doing their own thing, and it's hard to make too much sense out of them. But every now and then, there are windows of time, windows of opportunity. We call these technical setups, where a stock price behavior becomes relatively more predictable. All right. So the way to trade options, in my opinion, the best way is to learn technical analysis. This is the analysis of price charts and price patterns, and using some simple technical indicators. They help us to identify those high probability moments in time to put our money at risk in the market.
So if we're doing this, how do we get started? What kind of things do we need to learn before we even begin to start trading?
So, you need to know the basics of options. You don't need to get into all of the complex math. There are books out there that make options out to be extremely complex, and they can be, but they don't need to be. You need to learn some technical analysis skills, how to read trends, you need to learn about things like mean reversion. You need to learn how to run a brokerage platform. You need a good options broker, and you need to know how to place orders. One of the most important things you need to do is learn how to manage risk. All right, because without risk management, you can probably kiss your account goodbye, particularly when you're trading options. So risk management is absolutely paramount. And then I think the final frontier for aspiring traders who want to become successful, it's just developing their mindset, developing that winning trader's mindset, and that is what will set you up for long-term success.
So a friend of mine got into trading stocks. I don't know what he was doing specifically, but the problem with him doing it as a secondary gig was that he had to be in front of his computer like at certain times. The market opened, the market closed. He had to be there to watch for the time to get in and get out. And so it was really tough for him to do it as a secondary gig because, at some point he's got to get about his workday. He can't just sit there and watch the trending patterns. So is this the same thing with options? Because it seems to me like we want to trade something that allows us to do it maybe as part-time, but it's hard to do if we have to sit in front of a computer and be watching what's happening all day.
I couldn't agree with you more. And honestly, the last thing I want to do is sit in front of my computer and stare at price charts all day. All right. So all of my trading is done based on daily charts. All right. Which means all of my decisions are made when the market's closed. It's peaceful. It's quiet. I'm not being distracted by, wild price swings. And really and truly, trading, once you've learned the methods, it can be done in 20 to 30 minutes a day on average. Now, there are some days where it might take you an hour. There are other days where it might take you 2 minutes. But I would say on average, 20 minutes, half an hour a day is the amount of time you should spend once you've learned the process and you've kind of grooved the process. The way I teach my members to trade is we build custom scans based on the technical criteria that we're looking for. And by running those scans, we get a short list of high probability opportunities. It takes 2 seconds to run the scans. And that way, instead of analyzing hundreds of charts a day, we only have to analyze a handful. And because we're using daily charts, we're not day trading. Generally, I just trade the first half hour of the market, put my orders on, and then I go to bed. US market this time of year opens at 10:30 p.m. for me. So I'm literally active for that first half hour or so, go to bed, wake up next morning, see what happened. So it's a very relaxed way of trading. And we've got members from all over the world, over 36 different countries now.
Wow. And your membership. So how does your system work? You've got a book, obviously, which I'm trying to buy, but apparently Amazon, it cannot take any orders right now. I've tried like 10 times and Amazon's broken, apparently. Just so you're aware, everyone is aware. Amazon in this moment is not working. I've never seen messages like we can't even deal with the traffic we have. I'm like, good for you, Amazon. So I'm going to get the book.
Their stock price.
Yeah, exactly. Now I know what options to get. Here's the question: what else do you have to help your students? Do you have a mastermind? Do you have training courses? Like, how does your program?
Yeah. So yeah, I've got online training programs which people can access on demand. It's a very comprehensive training program. So there's more than 60 videos, but they're all broken down into sort of 15 to 20-minute segments. There's over 20 hours of content there. So it's very comprehensive. And that will give you everything that you need in terms of knowledge, pr procedures, the rigor that you need to go out and start trading. That doesn't mean you're going to be an overnight success. Trading, like anything else, is experiential. It does require practice. You know, you can have the best golf tuition ever, but until you've played a few rounds and hit a few thousand balls, you're not going to get good at it. And then trading's similar. I always say to people, your first 100 trades is like your apprenticeship. And it's really only after once you've done 100 trades, that's when you really start to figure out what's going on. And that could take a matter of weeks, could take a matter of months. But once you've grooved the process, it's like, you know, grooving a golf swing. Once you've grooved the process of trading, what once seemed a bit awkward and difficult will start to feel like second nature.
So
Also within the programs, sort of our flagship program called Options Academy Elevate, that offers 12 monthly coaching calls. And then we've got a monthly subscription program as well, where people can hear from me every trading day of the year.
where can we find out more about the different programs and different options?
Yeah, so my website is www.taoftrading.com. That's TAOOFTRADING.com. And what I'll do, Ty, is I'll put up a special page for your listeners, taoftrading.com/Ty, TY, where they'll be able to download the first chapter of my book for free and access some discounts to our programs as well.
Okay, I appreciate that. I love that. What about if options trading isn't for us? I mean, how do we know the best style of trading that could potentially work for us? Is options trading the best for all of the students that you talk to, or people, or do you find that other styles of trading work different for other people?
Options have just got that unique feature of, like I said, the asymmetrical payoff, the limited downside with the uncapped upside. You know, people often get attracted to things like futures and Forex because they also offer leverage, but there the leverage is a double-edged sword. You know, it can help you on the upside, but it can also whack you on the downside if you get it wrong. Or people can just trade normal stocks, and that's fine too. But it's just it's I guess it's like the slow lane to wealth creation. Stocks are great if you're already wealthy or if you've got a really long runway. But if you are looking to accelerate your wealth creation potential, options, I think, are the way to do it. In terms of finding out whether it's for you or not, I mean, I would usually say to people, spend $9 on my book, you know, and have a read of that. You know, people will agonize more over a $9 purchase on Amazon than they will spending $100 out at dinner. I like Ramit Sethi's rule: if a book looks even remotely interesting to you, just buy it. You know, for the price of the book, if you get one or two good ideas, it's good value.
So does this work if the market sucks? Because the market right now, you know, like any given time, it's up and it's down, right? So you know, what's your outlook? Do you have any kind of outlook on what's happening with the markets? And is it good or bad? Is there a good and bad time to get into trade options? Does it matter if the market's up or down? Give me some insight there.
I think a market like this is the best time to start trading because, you know, if you start at the beginning of a year like we had last year, where 2021, the market basically went up in a straight line. We didn't really have any corrections, so to speak of. That can really lead you into a false sense of greatness. Whereas you start trading in a market environment like this, it is the best teaching experience and it will keep you humble. And humility is important in trading. I mean, you need to have a bit of ego. You've got to have enough confidence to put the trades on in the first place. But you've got to be humble enough to recognize that we're always dealing with probabilities, never certainties. And that a market like this will teach you that. But yeah, I mean, the beauty of trading options is you can make money in a falling market by buying put options. So you can make money literally in any market condition, whether markets are rallying or falling. There's always a trend to be found somewhere. And options give you that flexibility to make money in rising and falling markets. In terms of an outlook, look, I think the market is likely to be difficult for the next few years. I don't think we're headed for a big crash necessarily, but I think we could be looking at a prolonged period of wide-ranging chop like we saw in the 70s. So we could look back at the market in 5 or 10 years' time, and the S&P maybe didn't really go anywhere, but it had some big rallies and some big falls in between times. And that sort of an environment is harrowing if you're a buy and hold investor. But if you know how to make money on the upside and on the downside, it's a really good environment.
You talked about, students needing to learn to kind of see how they approach risk or their risk tolerance. Well, what do you teach your students about that, about kind of determining their own risk tolerance? Because I imagine everybody has a different threshold there, what they're comfortable with.
Yeah, it's a really good question. My approach to risk is non-traditional. I mean, you go to a traditional financial advisor or financial planner, they want to find out what your risk tolerance is, because Wall Street wants you to believe that high risk equals high returns. All right, and that's another one of the myths of Wall Street. Let's take a step back and consider what risk actually is. Risk is it's the risk of permanent loss of your money. All right, losing. When you lose money, that is how risk manifests. So what Wall Street is trying to say to you is that in order to maximize your returns, you've got to increase your risk of losing. And we've been buying this hook, line, and sinker for decades. I've got an alternative to propose to you, and that is to increase our chances of winning. We've actually got to take responsibility for minimizing our chance of losing. To me, that makes a whole lot more sense. Now, losing trades are part and parcel of life in trading. To me, they are just an operating expense. Don't get emotional about them. Treat a losing trade the same way you would treat buying paper for your office photocopier. It is just a business expense. Now, like any good business, we want to minimize our expenses, okay? But we're not going to eliminate them entirely. There is always a cost to doing business. And in trading, your main cost of doing business is losing trades. But with risk management, what we want to do is, instead of hanging on and hoping that we'll be right in the long term, if something isn't working, we get out of it. We just cut losses pretty ruthlessly. You sack your bad employees. All right. If you've got bad employees that are rocking up to work late every day, and they're taking 15-minute cigarette breaks every hour, and they're rude to your customers, what are you going to do? You're going to keep them around? No, you're going to move them out. Same with your bad trades. If your bad trades aren't working for you, chop them off at the knees, get them out of your portfolio. Focus your attention on your good trades, the trades that are working well for you. And so I teach people to manage risk both on a per trade level and also at a portfolio level. So one of my portfolio guidelines is, if ever my portfolio falls in value by 15% from a high watermark, I close everything and go to cash. All right, because it means I'm obviously out of sync with the market, and I just need 24 hours to 48 hours minimum just to chill out and recalibrate. And the reason I chose the 15% level is I know that if I lose 15% of my portfolio, I've only got to make 17.5% back to get to break even. If I lose 50% of my portfolio, I've got to make 100% just to get back to where I was. And that is a psychologically really tough spot to put yourself in. And it's something that most people will fail at, particularly if they're not very experienced.
Is it really possible to do this and generate a full-time income doing it? I mean, obviously somebody with your experience, knowledge, obviously can, right? But can somebody like me that doesn't know anything about markets, doesn't really know a lot about options, can I come in and learn this and get to a point where I'm creating a pretty sizable return where I can pull money out to live on? I mean, do you have students doing that?
Yeah, we do. I mean, you need a bigger account to be able to do that. I say to people, if you're successful in the program and you're diligent and you're consistent and you follow the processes, you should be able to target returns of 5% per month once you're up and running. And what I would say to people is, back solve for that. If you want to determine how much money you need to pull a decent income stream from it. If you want to be more conservative, maybe assume a slightly lower return target than that. But that's how you figure out sort of how much money you need. And if you've got $5,000, $10,000 today that you want to try and grow it, maybe it's going to take you 5 years to grow that into a pot of money that is then big enough for you to draw a full-time income stream from. But there's no time like the present to start on something like this, because every year or two that you delay, that's compounding returns that you're missing out on.
How do you analyze the market? When I think about trading stocks or anything to do with the market, I think about the guy sitting at his desk with 4 or 5 monitors, right? And all of these, and it just, the thought of it's overwhelming. But then you mentioned earlier that you could just look at a few simple things to be able to do it. So I don't need a detailed analysis, but give me an overview. I mean, is it really complicated to be able to figure out what to analyze in the market to be able to do this right?
No, it's not. And as part of the training, I provide my members with daily and weekly checklists of things that I recommend they look at every day, the things they look at every week, and it's just it's part of the process. And once you've done it a few times, you can get it done in a couple of minutes. And it's looking at things like the major indices, the S&P, the Nasdaq, looking at some of the major international indices, looking at the major sectors, the dollar, bonds. All of these things will give you a bit of an idea of what's going on in the markets, whether we're seeing, risk appetite coming into the market or fear coming into the market. Track things like the VIX. There's probably 15 to 20 odd symbols that I recommend people track with some regularity and become familiar with, and that'll give you a pretty good handle on whether we want to be skewing our trades more towards call options or more towards put options.
Well, give me an idea of a success story of one of your students, what that looks like.
Yeah, so I mean, one of our most successful members last year, he sent me a beautiful email, sent me his brokerage statement and beautiful testimonial. He made 717% last year in 2021. And this, I mean, this just lights me up. This is when the student becomes the master, because I can tell you, he did a lot better than I did. But these are the sorts of success stories we're getting. We've got many members who are making triple-digit returns a year.
Wow. Simon, really interesting stuff. And for everybody that wants to learn more and be able to get started, get involved, where should they go? What action steps should they take?
So I would say, well, hop onto my website, head over to toweroftrading.com/TY, and they can download the first chapter of my book. If they like that, they can spend the $8.99 on Amazon and buy the Kindle version, and go from there. I'll also make available some other educational material, an online workshop we hosted a few weeks ago, and we'll put some discount codes in there as well for them.
Awesome. Simon, thanks for coming on with us today.
It's been a real pleasure, Ty.
So listen, if you're listening and watching this is a phenomenal way to do a lot of different things. Eventually turn it into a primary income stream, turn it into a secondary income stream. But at the same time, it's just a really good way to control your own investments instead of putting it into somebody else's hands, right? Because that's a scary thing. Like my parents just retired, put all their money into somebody else's hands in the market, and now they're down 30, 40%. That's a really scary thing when you've worked your entire life to save money. And now all of a sudden 30, 40% of it's gone like that, and you're helpless. There's nothing you could do about it. So I see that real world experience, and I think, man, I want to have control, right? Like being entrepreneurs like we are, a lot of us want to be the ones steering the ship. We want to be the ones in control. The other interesting thing, I think that, I don't know if you picked this up in what Simon said or not, but if you just look at the basic research that you need to be doing on a regular basis, man, it really plugs you into what's going on in the world. And what that means is it's way better and easier with the knowledge you need to obtain to do this, to be able to grow your business. You have an idea of the value of the dollar. You have an idea of what's going on worldly around the markets. You get an idea of trending trading to see what things in the world affect certain things a different way, like certain markets in different places. And all of this gives you a huge advantage of running your business too, that kind of knowledge and insight. But it all starts just by getting a basic, look at what this is like. And the easiest way to do that is go to the taooftrading.com/Ty, which is just TY. So if you go to taooftrading.com, that's TAO of OF, then trading.com/TY, which is Ty, then you'll be able to grab the first chapter of Simon's book. Now, I recommend you buy the book. The book's super cheap on Amazon. I'm trying if Amazon will eventually let me do it. We're around Christmas time right now, so Amazon is apparently buried and cannot take any more orders. Good problem for them. I'd like to be there too. Okay. But that being said, go buy the book. It's worth it. And as Simon says, of something I believe in strongly, if you get a book and you learn one thing or two things, then that's a really big win. And I look at all books that way. Some are the Bibles that I run my life on, and some are just ones that get 1, 2, 3, 4, 5 concepts that forever changed my life. So make sure you go to taooftrading.com/Ty. Make sure you grab the book as well. And I'll put a link to that book right here on the actual show resources page. And that way you get a good look at how all of this works. A lot of knowledge, even if you don't jump in, and it gives you more control of creating maybe a primary, secondary income, or just having control over your own investment, something we would all love to do. So make sure you visit taooftrading.com/Ty.